Welcome to Dr. Loren Scott's 2021 through 2022 Virtual Economic Outlook. I'm George Swift of the Chamber Southwest and the Economic Development Alliance, and we're glad to have you all with us today. Our program is sponsored by the Alliance and by Iberia Bank and First Horizon and McNeese State University, the H.C. Drew Center for Business and Economic Analysis with Dr. Dan Groft, Executive Director. We want to welcome all of you here. After Dr. Scott makes his presentation, if you have some questions, you can use the chat function and ask your question, and I will pass that along to Dr. Scott. And at the end of the program, later today, we will be sending you a link with the report for your convenience. So at this time, it's my pleasure to introduce our immediate past chair of the Chamber Southwest and the market president for Iberia Bank and First Horizon, Phil Earhart. Welcome, Phil.
Thanks, George. Well, good morning and welcome to this year's Louisiana Outlook, and what a year it's been. Iberia Bank is very pleased to sponsor Dr. Loren Scott this morning with the Alliance and McNeese. A brief background on Iberia Bank before I introduce our speaker. When we entered the Southwest Louisiana market in 2011, we were a $500 million region. Since then, we've grown to $1.3 billion in deposits and #1 market share in Southwest Louisiana. Pretty exciting stuff. Now on to our program. Loren C. Scott & Associates is a 36-year-old firm that provides economic consulting and public speaking services for a wide range of clients. Consulting activities include impact studies, forecasting services, analysis of policy proposals, and general economic analyses. Consulting clients include BP, ExxonMobil, Entergy Corporation, Chase, Capital One, Sassaw, and a multitude of others. Dr. Scott has been interviewed on MSNBC, CNBC, Bloomberg TV, and several local TV stations, and his work has been cited in such publications as the Wall Street Journal, the Financial Times, USA Today, the Los Angeles Times, just to name a few. He was on the economics department faculty at Louisiana State University from 1969 to 1998, where he rose through the ranks from assistant professor to the holder of the Freeport-McMoran Endowed Chair of Economics. He is presently Professor Emeritus of Economics at LSU. Dr. Scott is the co-developer of the Louisiana Econometric Model, a model used for providing annual forecasts for the Louisiana economy, which are released each fall. Let's see what Dr. Scott's crystal ball says for Louisiana and Southwest Louisiana in particular. Please join me in welcoming Dr. Loren Scott.
Thank you, Phil. Thank you very much. Crystal ball is kind of foggy right now. This is one of the probably the toughest forecasting year that we have ever had. I first of all want to say thanks to Phil and Iberia Bank and also to McNeese for sponsoring us here today. We're really grateful for their support here, and also I think they help us out in the Lafayette market as well with our presentations. That's very important to our deal. I want to just express just how heartfelt concern for all of you over there. I have developed a lot of friendships over the years with the people that attend this, and we in Baton Rouge felt a sense of relief when Delta and Laura turned the way they did, but at the same time, every one of us have friends and neighbors over in your area, and we were just heartbroken about what you have been through. If we didn't know how tough you were, we would be really, really concerned. But we know you're tough. We know you can do this. And if we can help you out with information, that sort of thing, be sure and call us. And speaking of information, I want to just tell you that and when we do our forecast, we don't just sit in a room in our office and kind of look at numbers. We talk to a lot of people in the different market areas. And I'll tell you, the people in the Lake Charles area are particularly good about talking to us. George Swift and RB Smith there at the Alliance, always great help for us, a lot of good information for us. Kevin Melton out at the Chenault, Ricky Self over at the Port, Jim Rock at the LAIA, really has been giving us a lot of really good information. Michael Flatt out at Northrop Grumman, Dale Logan at the Southwest Louisiana Contractors and Users Council. Just a number of people have answered our phone calls, and we're very, very grateful to them for all the support that they gave us. I'm going to now share with you here, and let's kind of get going here. Come up. Here we go. And so want to start, first of all, I want to just acknowledge that for the first time in our history, because of budgetary problems, LSU was not able to help with the financing, underwriting the Louisiana Economic Outlook. So we're very, I just want to just acknowledge Blue Cross Blue Shield and Clico, Home Bank, ISC, Entergy, Shell, and Gallagher, and also ExxonMobil for making it possible, because this year it would not have been possible at all without the help of our underwriters. We want to be sure and thank them. I also promised my co-author that I would be sure to acknowledge him in a PowerPoint slide. So here I am. Can you read that? Okay, I'm just kidding. Greg Upton is the co-author of the Louisiana Economic Outlook for the second year. He's the Associate Professor of Research in LSU's Center for Energy Studies. He's really, really knowledgeable, especially in the area of energy. And he also helped a great deal this year with just the presentation of the Louisiana Economic Outlook, which I know that everybody that's listening today will get a free copy, thanks to George. So we start out today with, what if the year 2020 was a drink? What would it be? And I think the answer is a colonoscopy prep. I mean, it's been that kind of year this year, really tough. Actually, I cannot believe that it's actually October. I should have changed this to October. It seems like March was only just 16 years ago. What a year this has been. This has been very strange. And boy, has it ever clouded up our crystal ball. It's very difficult. So I want to start by talking about the impact of COVID-19 and also the hurricanes and what's been going on in the Lake Charles area and in the state this year. And I want to start also at the national level and look at the impact of COVID on the national economy. You see here of course, the best measure of the general state of the U.S. economy is real gross domestic product, a measure of the amount of goods and services we're producing in the economy. And as you can see here, the first quarter of 2020 was bad, but look at that number for the second quarter, a 32% drop in real gross domestic product. Now, the Bureau of Economic Analysis and the U.S. Department of Commerce is responsible for putting together these data. They've been doing that for 73 years. That's almost 300 quarters of data. This is the worst quarter ever in that 73 years of data. Worst quarter. Matter of fact, the next worst, well, I think, was a quarter in 1958, in which real gross domestic product fell by 10%. And so this is more than 3 times worse than the worst quarter we had ever had before. And the odd thing about it is it wasn't because of some major imbalance in the economy. There was not a housing bubble. There was not a tech bubble. It was basically caused because the government decided we need to shut down to fight this virus. So it was very odd in that respect. I want to show you what happened in the state in the very worst month. We'll get to Lake Charles in a second. The very first month of total shutdown was the month of April. And in the month of April, our employment dropped by almost 272,000 jobs, a drop of 14%. Unemployment rate jumped all the way up to 14.5%, which is about the same as the U.S. economy. But what is interesting is how this shutdown impacted the different areas of the state's economy. The hardest hit by far was the leisure and hospitality area. This is where your restaurants and your hotels are. A decline of 46% in employment, almost 170,000 jobs, 107,000 jobs disappeared in this sector. Now, this is very unusual for a recession. You go back at previous recessions, usually this sector is relatively strong. The services sector is relatively strong. This is the first recession I'm ever aware of in our country's history that was driven by a downturn in the services side. As a matter of fact, if you look just under this rectangle to the other services sector, you'll notice they get hit by 13%. This is where your beauty parlors, your barbershops that were totally closed during this time period were. And if you look right above this box, the area that I thought initially was going to grow, because, I mean, this is a healthcare crisis, right? I thought the healthcare and the social services area would really grow. But in reality, it went down 11%. And the primary reason for that is what happened at the clinics. You folks quit going to clinics. A lot of the clinics were closed. You definitely delayed elective surgery. You're afraid to go to the hospital. You didn't want to be around those coronavirus people. And so the healthcare sector really took a lick. Now, the other sector, which is very important when it comes to the Lake Charles area, is the construction sector. Look at that hit. The state down 14%, construction was down 17%. Now, the construction sector fell hard for three reasons. Number one is what I call the displaced contractor. And I'm going to try to explain this a little bit indirectly. There are 18 refineries in Louisiana. We are the number 2 state in the nation in terms of refinery capacity, right behind Texas. And 3 of these are located in Lake Charles, Phillips 66, Citgo, and the much smaller Calcasieu refining plant. This is a picture of what happened to gasoline production in the United States. Look at this area here. In just 3 weeks, gasoline production in the United States fell 42 stinking %. And one of the things, this really hit our refineries very, very hard, probably the worst hit that they've ever experienced in their history. And if you look at a refinery, for example, the one I'm most familiar with is the one just north of the Capitol building here in Baton Rouge, the very large Exxon refinery. If you look at employment at that refinery, there's about 3,500 people that go to that refinery every day to go to work. But it may surprise you to learn that only about 1,500 of those people have on an ExxonMobil shirt. About 2,000 of them have on a shirt that says Performance Contractors, Turner Industries, Cajun Industries, ISC contractors. They are contractors. They are the people that come there every day to make sure all that stuff that you see sticking up in the air is working. And so what happened during this time period when these refineries experienced this big drop in demand, the first thing they did was start laying off the contract workers. Now, the good news partly is that this gasoline consumption part has come back a good bit. But if you look at the blue line, which is 2019, compared to 2020, gasoline consumption in the United States is still about 11 to 12% below where it was last year. So there's been a nice recovery, but not all the way back. And I guarantee you, jet fuel recovery is still way down. So what has happened is you've seen some of these contractors coming back, but that has not been fully the case. But because you have 3 refineries here in your area, you got hit by this. A lot of contract employees were let go. And as you know, Calcasieu refinery is essentially almost closed now. I think they just announced they laid off 69 people. And this is pretty much characteristic of what happened to the smaller refineries all across the United States. And a number of them closed completely down. The bigger ones did not. Then the other thing that happened was that because of the COVID, a lot of construction projects were slowed. And others, like for example, this year, we thought that there were going to be a couple of LNG projects that would say, we're going to make a final investment decision. We're going to go forward. We're going to start building these LNG plants. Well, because of all the uncertainty around COVID, and I'll show you some more stuff about that a little bit later on, a lot of these projects that would have been started up, hiring a lot of people, were delayed into the future. And then, importantly, there are a lot of your chemical and refinery firms every so often have to schedule something called a turnaround. They have to totally shut down the plant and do major maintenance and repair work. Well, there were a number of turnarounds scheduled for this year that have been delayed into 21 and 22 as best they could, safely could. And so again, a lot of people that would have been employed in the construction sector were not employed. And this is a particularly difficult problem in the Baton Rouge, Lake Charles, and New Orleans MSAs, where you have a lot of these very large refineries and chem plants. Now, the other sector that got nailed pretty good here is the mining sector. This is where the oil and gas extraction people are, down 15%. And of course, the primary reason for that is because of what happened right here. It's almost hard for us to remember this, but back in January, the price of oil was over $60 a barrel. And then the COVID hit, you had the worst drop in the demand for fuel oil that we've ever experienced in our country's history in a short period of time. And the price of gasoline dropped all the way down to 20. As a matter of fact, you remember there was one day when the price of West Texas Intermediate was actually negative $38 a barrel. That's never happened before. It was because of a peculiarity in the contracting that took place. The futures contracts for May were coming due, and there was expected to be no place to put this dadgum oil because of the decline in demand. We were starting to fill up tanks, salt domes, ships, whatever, with oil, and we're running out of storage space. So they were actually saying, "Look, we'll pay not to take the oil." It was the weirdest thing. Now, as you can see, the price of oil has come back, but it is stabilized at about $40 a barrel. As a matter of fact, today's Wall Street Journal shows that yesterday the price was around 40. It's kind of hung in there since June and has not gone up very much. As a matter of fact, if you look at our forecast for the next 2 years, we are forecasting that the price of oil will average 40 this year, will average 45 next year, and 49 in 2022. These are not good numbers for the state as a whole in general. This is not good. This is not good for Houma. This is not good for Lafayette. It's not good for offshore activity. This forecast is actually based on what the futures market is saying. The futures market is basically saying this is what the price of oil is going to do. Now, there is a wide range around this point forecast. We call it a point forecast, and then there's a confidence range. You see the confidence range is very wide. I could very easily create a scenario in which the price will go to 60 and 70, but I can also create one where it goes down to 30. We want the price of oil to be higher. Almost, it doesn't matter where you are in Louisiana, especially at home in Lafayette, want it higher, but also we want it in Lake Charles, because you have a very large number of chemical plants here, at least 16. It's probably more than that now. And here's what these chemical plants have been expanding a lot lately. The primary reason for that is they are competing with European chemical firms for the world share of the chemical market. And what happens, Europe's chemical firms mainly take oil, convert it to naphtha, and then they make naphtha into ethylene, which then goes into all kinds of consumer products. In the United States, our chemical firms mainly take natural gas and they convert it to ethane, and that converts into ethylene. Both of them trying to get to ethylene, which goes into a lot of our final consumer products like plastics and paints, drugs, and all kinds of things. Well, if they're making theirs out of oil, we're making ours out of natural gas. You kind of remember the 7-to-1 ratio? When the price of oil is 7 times higher than the price of natural gas, they're totally competitive in terms of BTU content. But if the price of oil goes more than 7-to-1 ratio, suddenly the natural gas producers gain a competitive advantage. Well, today the price of natural gas is 3 in the United States. The price of oil is 40. That's way more than 7-to-1. So our chemical firms have a competitive advantage over the European chemical firms. So we have a chance there to gain more of the total market share. This is also important for the LNG companies in your area. Not only the ones that are operating, but the ones that are prospective that we'll talk about in a minute. This is a picture of the price of natural gas in the United States here in kind of pea green, the price of natural gas in Europe in blue, and the price of natural gas in Japan in red. Now, if you go back here in the 2018 time period, look at that competitive advantage that we had over the European and the Middle Eastern suppliers of natural gas, these people, because they price their natural gas off the price of oil. And the higher the price of oil, the higher the price of their natural gas versus ours. Now, look what happened when that price of oil fell. The price of oil fell down to 20, and guess what happened? The European LNG price got very low. But in addition to that, the demand for LNG in Europe fell because of the mild winter and also because of the COVID impact on their industrial sector. So they had a big drop in demand of about 20%. And so look what happened here. Suddenly our price of natural gas about the same as theirs. And so what happens to some of your LNG companies there? In July and August, there was a lot of cancellations of LNG exports from Sempra, from Cheniere, Cameron LNG there. And because they didn't need the dead-gum LNG and they weren't competitive. Now, the good news is the price of oil has risen back up to 40. And so these red and blue lines are going to start coming up again. And our LNG producers are going to get more and more competitive. And the prospective LNG companies that we'll talk about in a minute are also going to be more and more competitive. And that's going to help them pull the trigger on their projects, we hope, going forward. Now, what I wanted to show you here is how much we have improved. Again, we're looking at the state level between April and August, the latest numbers we have for August. Now, this is going to be interesting to see what happens tomorrow when the September numbers are released. But let's look what we have here. Here again is the number in April. Remember, that was a minus 272,000 jobs. By August, it had dropped down to minus 134,000 jobs. That was an improvement of about 51%. Now, earlier, I want you to kind of remember this 51% number. Okay, we're going to come back to that 51% number a little bit later on. Our unemployment rate had dropped all the way down to 7.6, a better unemployment rate than the national level. But I want you to notice a couple of things in this chart. When you look across the different sectors, the mining sector actually got worse during this time period. You had more layoffs in the oil and gas extraction sector between April and August. It was one of the few, it was the only sector that got worse. Now, the local government sector also did not improve very much for reasons that we'll see in just a second. The other sector that did not improve a whole lot was the professional services and the healthcare sector. The healthcare sector, there's still a lot of you that are, a lot of clinics that are only doing virtual. They don't need their nurses as much. A lot of you are still delaying elective surgery as much as you can. So the hospitals are still kind of struggling from that standpoint. But the professional business services area, that's where your engineers, architects are, a lot of the people associated with the construction side. And as you can see up here, the construction side only back 34%. And so that sector did not recover nearly as much. How about this, folks? The one sector of the economy that recovered more than anybody else was state government. State government up 2,400 jobs between April and August. And state employees got a raise. I want you to kind of think about that a minute as you look back up these columns and see what was happening in the private sector. I'll let you conclude what you want about that. Now, let's come back down to this local government, because I'm going to show you some important stuff about the local government side. The Legislative Auditor's Office has done a great job in trying to estimate for local governments their revenue losses from both COVID and Loren. Now, they have not done the Delta impacts yet, but they have come up with some estimates for FY 20, 21, and 22 about what the total loss in sales, property taxes, gaming taxes, and mineral revenues will be at the local government level. Statewide, down about 192 million. in FY20. FY21 down 522 million, much bigger decline. That is primarily because of what's going to happen to property tax collections in 2021. When you have a disaster like Laura or Delta, one of the things your assessor has to do is to reassess all the property in your parish. Your assessor has about 100,000 properties to reassess this year to see what the damage was from Laura and Delta. Give you a break on your property taxes this year based on kind of what the insurance company thinks your loss will be. It's going to be a very difficult task to do, but you're going to get a break on your property taxes that you pay in January, all right, which is going to be in FY21. And then they'll have all that property have to be reassessed the next year after it has been improved. You've made all your damage corrections done, and then she'll have to reassess again in next year, and that'll show up in the FY21 numbers. You can see what the percentage change in local government revenues to be. Now, it's interesting to look across areas. The hardest hit area was Cameron Parish with a 17.4% drop in local government collections, mainly due to Laura. When it comes to Calcasieu, most of your drops is you're number 2 in terms of percentage hits. Most of that is due to COVID. Now, you might say, well, why didn't we get hit as badly as Cameron from Laura? And the answer is because you're gonna have two kind of almost offsetting things happen going forward. Number one, you're going to have a decline in property tax collections because of the reassessment, a decline of about $33 million, according to the Legislative Fiscal Office. But on the other hand, there is going to be a pile of insurance monies coming into your areas to help you rebuild. And most of that is taxable with local sales taxes. And you'll probably pick up an extra $30 million or so in sales tax collections that'll help offset the $33 million that you'll lose in property tax collections. So the impact of Laura and Delta will probably the sales taxes will almost offset the property tax losses, but it doesn't change the fact that you lost a lot from COVID. Okay, the COVID, you took a hit on sales taxes and gaming taxes and mineral revenues and all kinds of other stuff. The absolute worst hit parish in the state was Orleans. That was all due to COVID. The second worst hit in absolute terms was Jefferson Parish. In absolute terms, you'll be down an estimated $59 million, almost $60 million lost in revenues at the local government level. Almost all of that, virtually all of that due to COVID. Only about 3 million or so was due to the hurricanes. Cameron's absolute loss about 6.5. Now, again, let me come back and mention one other thing about Cameron here. This big loss for Cameron is, again, your sales tax collections will almost totally offset your property tax losses due to reassessment. Cameron doesn't have a sales tax. And so they're not going to have something to offset when that insurance money comes in to rebuild a Cameron. They're not going to have something to offset their property taxes. And so they're going to have to take the whole thing on the chin. And that's one of the reasons their percentage change is so darn large here. Absolute terms, it's not real huge, but in percentage terms, it is a big hit to Cameron Parish. Now, I had showed you what happened to employment by sectors of the economy. Let me show you what happened to employment by metropolitan area. Okay, again, here's that 207. Look at the worst month, April, 272,000 jobs lost, 14% decline. The worst hit area by far was New Orleans in absolute terms, 107,000 jobs. Now, this is our most tourist-oriented area of the state. And so the tourism business went through the tank. The convention business went through the tank. It went down to virtually nothing. They have the land-based casino and two riverboat casinos totally closed down during that time period. They had a lot of construction jobs that were canceled during this time period. The Mosaic project was totally stopped and not going to be restarted. So you can see they took it on the chin. But guess what? The hardest hit area in percentage terms was you guys. A 19% decline, 22,000 jobs vanished in April. So you get hit very hard. But there's two primary reasons for that. Number one, you are the largest gaming market in the state. 5,400 people were working in your casinos before this, and that the casinos were totally closed down from mid-March through mid-June. And so you took it on the chin there. And then the construction sector has really been a hard hit one for you folks. Now, when you look at the improvement, again, on the improvement side, remember the state had improved by 51%. The state had gotten back, was still down 133,000 jobs. That's a 51% improvement. If you look at like Charles, you're not coming back as fast. Okay, you're a lot slower, and I think that's primarily because of the construction sector. We'll talk a bit about the casinos in a minute, but your casinos were on their way back, although they could only operate at 50% capacity during this month. Now, notice these August numbers do not include the impact of Laura, because these numbers were collected in the week that includes the 12th day of the month. And Laura did not hit until later in the month. So you're not seeing the impact of the casinos yet. We'll see that when tomorrow's numbers come out. So that's going to be a very important thing for us to watch and to see what happens. Now, these are a lot of data here. If 2020 was a scented candle, this is what it would look like. God, what a year, huh? Especially for you folks. Goodness. Now, let's start looking forward now and see what we think is going to happen. We want to figure out what is going to happen in the second half of this year and what is expected to happen in 21 and 22. When it comes to the second half of this year, there are two huge uncertainties. Matter of fact, there are two huge uncertainties covering this entire time period. One of those uncertainties is the vaccine. When will we get a vaccine? We have never had a period in world history when so much money and so much effort has been thrown at trying to find a vaccine. A kind of a discouraging point is if you look at the fastest we've ever put together a vaccine for a COVID type problem, historically was for the mumps. We found a mumps vaccine, but it took 4 stinking years to find that vaccine. Again, all the conversations that you're seeing right now indicate that we may have a vaccine by the end of this year or the first part of 2021. And then it becomes a matter of getting everyone inoculated. It is possible to get everybody in the United States inoculated by the middle of 2021, but we're going to have a vaccine that everybody trusts. We've got to do it. That's going to be real critical. And so our forecasts are based on a vaccine being available in 2021 and virtually almost the entire world being vaccinated by the end of next year. If you read some of the work done by McKinsey and others, they really think this is possible. Now, the second thing is the presidential election that we're going to have in about 2 weeks. And what is going to happen there? This is a very consequential election. Your choice is going to be between an administration that focuses on growth and one that focuses on equity and income inequality and correcting those things. And I understand if you are on the equity side, I hear you on that, but you also need to understand, we have evidence from 2008, 2016 or so, that when you choose the equity side, you also choose slow growth. And then for Louisiana, very importantly, is if you look at Biden's climate plan, this is what it says on his website. He wants to ban new oil and gas permitting on public lands and waters. Waters includes the Gulf of Mexico. Now, it's one thing to say we're not going to allow any sales of any more leases in the Gulf of Mexico. It's a total another thing to say there's going to be no more permitting in the Gulf of Mexico. Because once you buy a lease and once you start drilling, there's a whole set of permits that you have to get as you go along, moving from the lease sale to the drilling, to the production, to maintenance and stuff like that. If you totally shut down permitting, you're going to close the doors on Houma. I mean, Houma will be kind of a ghost town going forward, and it's not going to be all that good for Lafayette. So this is a very important thing for Louisiana. If candidate Biden is elected and actually does this, I mean, this is going to be very bad for a state like Louisiana or Texas that is very much into the oil and gas side, especially exploration offshore. Now, as we look at 2020, the second half, let me show you what we did here. We have two different forecasts. I show this to you folks every year. Wells Fargo, very fine economics department. Consensus Forecast USA is an average of about 29 different forecasting firms in the country. And if you this is what has already happened here. Well, this is what we've already talked about. If you look at the third and fourth quarters, this is what they say is going to happen in the last half of the year. Now, I will tell you that our forecast of the Louisiana Economic Outlook are based on these numbers, because these are the forecasts that were available when we did this back in August. It's encouraging to learn that these numbers for the third quarter have dramatically increased. The economy is doing much better than these folks initially thought, especially the service side and the retail side is coming back much faster. These numbers are now on the order of about 26%. Now, these numbers for the fourth quarter are lower, okay? But their expected numbers for the third quarter expected to be very, very strong. Now, if you what we decided to do is, there's an old biblical proverb that says, "In an abundance of counselors, there is wisdom." So instead of going with Wells Fargo, we thought we would go with an abundance of counselors. So we based our forecast for the second half of the year on this column here. And if you kind of go through the math, what consensus is saying is in the second half of the year, we'll get back about 72% of real gross domestic product that was lost due to COVID. And so we said, okay, if they think, the consensus thinks there's going to be a 72% recovery, we're going to apply that to employment in the state of Louisiana. That we think by the end of the year, the state of Louisiana will get back about 72% of the jobs lost in the first half of the year. Now, remember, we've already gotten back 51%. You folks haven't. You've gotten back about 38. But statewide, we've already gotten back about 51% through August. If we can just get the rest of that back up to 72% by the end of the year, we'll be on target for what we were forecasting. Now, if you apply that to Lake Charles, basically, here's what you find. This is a picture of your employment from 1980 through our forecast for 2020, the rest of this year. Now, notice 2019, you were already losing jobs. You'd taken a hit in 2019 before the COVID even started. That was because you were in a lull between construction projects. A lot of big construction projects over there completed up. And so you had a big decline in construction employment. We think that in 2021, for the whole year, that you'll be down about 6.1%. That's a little worse than the state. You'll see in a minute, we think the state will be down about 5.3, but primarily because of what is going on with your construction side and some other issues. We have not built into this picture right here the impact of Laura and Delta. And let me kind of show you why. If you come back here to 2005, to this point right here, 2005 was when Rita hit Lake Charles. We had already written the Louisiana Economic Outlook when Katrina, and sent it to the printer when Katrina and Rita hit. We totally threw that in the trash and redid it and re-released our forecast in December. And what we said was, you guys had taken a huge hit in a time period when you weren't doing very well to begin with. You had almost no growth for 1, 2, 3, 4, about 6 years. And there was not a whole lot of prospects over there. And so we thought in 2006, you would decline because of the impact of Rita. And part of it, but look what actually happened. In 2006, you actually came out of that slump and started to grow. As a matter of fact, look how bad things were because of Rita. You had 47,300 homes damaged, almost 9,000 of them to the extent, more than 9,000, almost 10,000 of them to the extent they had to be totally torn down and restarted. Your 3 refineries were totally shut down, and all 3, it took until December for them to get back up. 2 of your riverboat casinos were badly damaged. These are the 2 Harrah's ones. One of those became what is now a Golden Nugget. Another one of them left your area and went to another area of the state. All your hospitals, except one in Cameron, were back up by January. Within 1 month, all your public schools were back up and running. The Port of Lake Charles had lost 40 million, had experienced 40 million in damages. Within days, was open to shallow water traffic. But here is why you grew instead of falling. There was a huge influx of insurance monies to rebuild your homes and your offices and your businesses. And that occurred because your damage was primarily due to wind, not to flooding like in New Orleans. New Orleans was due to flooding. And if you look closely at your insurance policies, they do not cover flood, okay, unless you bought the National Flood Insurance Policy. They only cover wind. Well, yours was all wind, so this huge amount of insurance monies came in to rebuild. And as a result, you actually grew. So we haven't really changed. I think Laura and Delta are going to somewhat impact the second half of this year. But we can't understate, and of course the legislative auditor's office also does not understate. They think a huge amount of insurance money is going to come in to rebuild, and that's going to help employment stay higher than you might normally expect due to the casinos. If you look at the state as a whole in 2020, we think the state as a whole will be down about 5.3%. That's assuming that we get back about 72% of the jobs lost in the first half of the year. Now, I want you to notice I have the other recessions the state has been through since 1980, the last 4 decades. Look at the percentage decline, 1.2, 2.8, 3.4, 1.2. The only recession we've been through in modern history that was worse than this one was the one that occurred in the 1980s when we lost 9% of our jobs. But that 9% of the job loss occurred over 6 years. This second job loss occurred over 6 months. And it was caused mainly because of the shutdown that took place. So this is very weird recession, a very bad recession for the state, and very unusual as it turns out. So 2020 was a slide. This is what the sucker would look like. This has just been a year that we're very anxious to put in the rearview mirror. By the way, a recent household survey was sent out about drinking during the shutdown and when everybody was confined to their homes. Are you drinking more while in lockdown? And here's what one person's response was. I think we know what that means. So now let's look at 2021 and 22. Let's go on out 2 more years and let's see what we expect for your area. And I think we have some relatively good news here. First of all, at the national level, if you look at the forecast for the national level, 2021 expected to be up about 4%, 2022 up about 2.1%. Now the 2.1% is our forecast from our forecasting team. When we put the Louisiana Economic Outlook together, neither Wells Fargo nor Consensus Forecast USA had a forecast for this year. We had this kind of low because we built in the possibility that the presidential election will result in an administration that's more focused on inequality than on economic growth. And so that would bring the number down. Now, it may interest you to know that that Wells Fargo thinks this number is not going to be 4.4, and this number about 2.7. So ours is a little bit less optimistic. But basically what this means is the national economy recovery will not be a V. It'll be more of a Nike swoosh. You know, when you come down quickly, look at that thing on the side of the Nike tennis shoe down, but it doesn't pop right back up. It kind of slowly goes up. It'll be the latter part of 2021, early part of 2022 before the national economy gets back everything that it lost as a result of COVID. Now, if you look at Lake Charles, you're going to get the recovery of your COVID losses. In other words, your retail and your services sector coming back. Our forecasts are basically based on at least one or two final investment decisions being made on one of the LNG proposed projects. You've got some really big projects out there, and we are hopeful that at least one or two of those will come forward, and that'll really impact your area. To kind of show you, again, what's going on, you already have about $13 billion worth of activity, major construction jobs going on right now. Sabine, the Cheniere project, Sabine, there's 6 train. They've done an FID on the 6th train, which is going to require them also to build a 3rd berthing area at their site. That's about a $3 billion project. Cameron LNG has just done an FID on their 4th and 5th trains that they're going to build those. So that's going to be good. Venture Global is already in the midst of building their $5 billion project. Now, this is kind of unusual in that you're not going to get the full benefit of this because this is a very modular oriented project. A lot of things are being built elsewhere, brought to your area, kind of tinker-toyed together and put together. But still, you're talking about $13 billion worth of projects. Now, when you looked at the announced side, the total amounts to almost $58 billion in potential projects. And so what we're hoping is at least one or two of these will announce. And we kind of have asterisks. They're listed in the order of size, not in the order of probability. We think probably the highest probability is the Lake Charles LNG. This was going along very well. They've got all their permits. They've gotten all their FERC approvals. But one of their major partners, Shell, remember Shell has a lot of refineries and they do a lot of oil and gas exploration drilling. They're having some problems right now. One of the things they did was they dropped out of this partnership. Now this is Energy Transfer Partners project. And we think this has the highest probability of happening, followed by Driftwood there with 2 asterisks. Driftwood got an extension on one of its loans that'll keep them viable out through the early part of 2022. They still have to get some project, some external supplier agreement signed, and that could happen. Magnolia LNG, this is our 3rd one. Was you may know that an outfit called Glenfarne bought all of the assets of Magnolia LNG for only $2 million. Now, you might think, well, this means this is probably not going to happen. But in reality, Glenfarne is a very well capitalized outfit and pretty serious about it. I think there's a good chance that this might happen. Monkey Island LNG is not even in the FERC process right now. So they're at least 2 years or 3 years out from pulling the trigger. Not much has been heard here. G2 Net Zero is actually, you're starting to see some activity. I thought this one was dead, but I think what you might see towards the end of 2022 is G2 Net Zero, starting with the construction of about a $1.2 billion power plant on their site, and they're saying that they got this new technology to generate liquefied natural gas with zero greenhouse emissions. So that's one of the things that's positive for them. But that's looking a little more hopeful. Probably not 9 billion, but maybe 1.1, 1.2 billion by the end of next year. Lake Charles methanol, still not much movement on this one at the port. I think this one may be up to almost a $4.6 billion project now. But to my knowledge, they have not. The methanol market is not really great right now. So that's kind of holding them back. Proman, the Big Lake fuels project, actually starting to see a little bit of movement here. I'd almost said no, but a little bit of movement. Commonwealth LNG is about to do their filing with FERC. So there's been some movement there. There is another project out there that I think has a very high probability of happening. We'll see how that occurs. That'll be in your area. Juniper is in bankruptcy. I'm not sure that'll occur at all. But you have a lot of great possibilities out here that could add to your prospects going forward. Biggest thing. But the other thing is the turnarounds. Now remember, if you look at this picture from Logan's group, the SLCUC, they did some manpower projections. Look at this big hump that's going to occur in 2021. Most of that is due, as you can see, to turnarounds. You're going from about 5,500 people to almost 8,000 people that are going to be needed for these turnarounds. So the turnarounds are going to generate a lot of construction activity going into 2021, a lot of new jobs for your area. There's a lot of new permanent employees coming on. This is the information from Jim Rock's group, Lake Area Industrial Alliance. You can see the number of new permanent jobs coming online in 2020, 2021, and 2022 as some of these projects underway are finished. Now, I will point out that you can almost double these numbers in reality because these do not include contractors. Again, if you go to most of these facilities, almost only about half, a little more than half or so for most of them are actually wearing a shirt that says latte or has a shirt that says Sasol. The rest of them are contractors that wearing a shirt that says performance contractors or ISC or return to industry. These are not included in these numbers. And so these numbers will be bigger. And of course, you got a really big number here for 2020 that will be very helpful for you going forward. So you can almost double these numbers. And there's actually some other outfits that are not members of LAIA. They're going to be adding people over the next 3 years. Now, there's a lot of statistics. I've shared a lot of stats with you. I know you've seen a lot of COVID stats. And some of you may wonder, are these COVID stats really real? How much can we depend on them? I thought I would tell you a COVID tale. This lady asked her husband, did I get fat during quarantine? And his response was, you weren't really skinny to begin with. His time of death was 11 p.m. In August. And the reported cause of the death was COVID. So it helps you to kind of understand how some of these statistics come together. I want to also talk with you about, you are the biggest casino market in the state. As you can see in 2019, the first quarter, we have 5,400 people basically employed in your casinos and the Delta Downs Racino. Now I put this 725 in red for a reason that you will see. This is a non-trivial number across from Isle of Capri. Pre-hurricanes, it was amazing to see how the casinos were coming back. July revenues were 94% back, despite the fact that there was a 50% occupancy limit on the casinos. It was just really kind of amazing. These numbers probably would have been way higher. It would have been all the way back, apparently, had not been for that occupancy problem. The other good thing for you folks was the Isle of Capri was one of 2 riverboats that were going to take advantage of the new law that allows them to come on land. And so now the Gaming Commission will only allow that if you're going to make it a resort type land movement, you can't just shift to moving all your casinos on land. You have to build a hotel and, you know, other sorts of things. And so Isle Capri was beginning to build $113 million project, going to triple their space and add about 69 jobs. Then Laura hit on August 27th. We just got the data, I believe it was yesterday, on what the September revenues were like. September revenues for your 3 casinos down 65%, declined from 62.2 down to 21.8. Gold and Nugget and LaBerge reopened on 9/11. Delta Down Slots reopened on the 16th of September, so a whole half month was lost there. The Isle of Capri gaming barge broke loose and hit the bridge, as you well know, and then its land-based construction activity was damaged also. Before I finish this sentence here about will not reopen, let's look what happened as a result of Hurricane Delta, which hit October 9th. Golden Nugget and LaBerge reopened within about 2 weeks. Now, they do have a problem in that about 15% of their rooms, about 100 rooms, are going to have to be remodeled because water got into them. The Isle of Capri has not restarted construction, to my knowledge. And they are basically saying, we're not going to reopen the riverboat. Matter of fact, we're not going to reopen until the land-based site is ready. And that's at least 10 plus months out. So that's 725 jobs that you're taking a hit on because of the hurricanes. If you look out at Chenault, Kevin indicates there's about $40 to $50 million in damage that was done as a result of the 2 hurricanes. There's mainly good news at Chenault. The biggest part of the good news is Northrop Grumman. They got a couple of really nice new contracts with the Customs and Border Protection contract, $36 million contract to replace a bunch of nose cowlings on cows on some B-52s. So they are expecting to hire about 200 people. That's really good news for Chenault. Citadel Completions, what you know is they're taking upgrading really nice aircraft, and as you can see, they're still on schedule to increase their number of jobs by almost 100 between now and 2022. The one exception was Landlock Aviation. This is an aircraft painting company. Until recently, Delta was their primary customer, and with COVID and coming in, Delta has just, the aircraft industry is really way down. Jet fuel is really way down, needs hurting our casinos, but they have dropped their employment down to around 60. The good news out there is Louisiana Millworks is out there. There's going to be a great demand for their business. So that's going to be a bright spot for you that's located out at the deal, because they make cabinets and things like that for houses that have been damaged. Capital expenditures at the air park, you got groundbreaking next year on about a $2.3 million administration building, about $9.5 million on an air cargo facility, another infrastructure in 2021, and another $4 million in 2022. Louisiana National Guard expected to start a new readiness center, but we don't have a CapEx number on that. During the hurricanes, you're very fortunate to have this asset in your area because it made a very convenient staging area for all the FEMA, the Blue Tarp people, DOTD, Jeff Davis Electric. A lot of your search and rescue people were able to start out immediately, taking care of things, staging out of Chenault Air Force Air Park. So that was one of the nice benefits to the community of having this field available. You got that staging area work. On the coastal restoration, many of you may not know this, but there's a lot. Look at this, $150 million in coastal restoration work that's going to be done, is scheduled to be done in Cameron Parish. Your road activity is going to be down a bit, almost basically in half in new state road projects. The two biggest ones being the new Nelson Road extension and bridge and I-10, I-210 auxiliary lanes, Nelson to Ryan, that are going to be built. So that's down a little bit, but you got more than offset by what's going to happen in terms of coastal restoration construction money. At the Port of Lake Charles, they took a hit from Laura and Delta. There are 2 ship loaders and 2 ship unloaders. 1 is in the water and 3 were catastrophically damaged. Right now, they've got a vessel that has a crane, they call it ship gear, that is there. It's not as efficient, but it's still unloading and loading things there. They've approved the purchase of a mobile harbor crane mounted on tires that'll be here in about 12 weeks to replace 1 or maybe 2 of the unloaders. Their biggest problem is the damage to the warehouses and transit sheds. They have a total of about $217 million in damages, actually much worse than Rita, as it turns out. But the biggest part of that was the warehouses and transit sheds at the city docks. Many of them damaged so badly that you can't tarp the roofs. You have to actually tarp the stuff that's inside. They are, however, still operational. There are some issues with the channel because of a barge, a rock barge that was sunk in there, but they're working to take care of that problem. But the port is still very operational, up much quicker. By the way, your refineries and your chemical plants coming back much faster than Rita, because what they did when they rebuilt stronger. If you like, they hardened their infrastructure to handle hurricanes better. So they're coming back much faster than was the case with Rita. At the Port of Lake Charles, again, looking before all this other stuff happened, they had about $45 million from the Corps to improve navigation, improving the ship channel, etc., for more deep draft access. And if they can just get Lake Charles Methanol to pull the trigger, there will be some major capital expenditures coming forward, create a lot of construction jobs coming forward. You see about $120 million, $130 million in construction that'll take place if this sucker will just pull the trigger. So you'll get not only a $4.6 billion project, but also a lot of construction activity at your port. So you put all these together, I mean, here's what we think is going to happen in 2021 and 22. We think you'll pick up about 5,000 jobs in 2021 and about 2,100 in 2022. This would be the fastest growth rate in the state. Now, again, this very much depends on some FIDs hitting on some of those major projects that we listed before. Out of the 58 million, if you could just get 2 or 3 of those, this is going to be very, very possible. You will be one of only 3 MSAs in the state that we think will fully recover from the COVID by the end of 2022. All the rest of the state we think is going to be still, it's very much a Nike swoosh rather than a V, as you can see. But we think you, along with Baton Rouge and the Hammond area, will be the 3 that'll actually fully recover. So this has been a stinker. Again, we had not had the hurricanes built into this, but again, we think the experience you have with Rita is going to be replicated here. We know it's horrible, it looks terrible, it is bad. We're not trying to minimize that at all. It's bad, but a lot of money is going to come in to help you rebuild, and that's going to help. That's going to help fire up the economy as well. Statewide, I have a picture here of a statewide employment from 1980 through our forecast for 2021. As you can see here, we have the state coming back, picking up 72,000 jobs next year, mainly a lot of that recovering the lost COVID jobs, and about a little over 21,000 in 2022. This will still leave the state about 11,300 jobs below pre-COVID. So again, Nike V, a Nike swoosh, not a V. It's going to be kind of tough going, and going over the next couple of years. What happens in Houma and Lafayette The presidential election is going to have a great deal to do with what happens in those two communities. I want to finish by showing you this word in Chinese. This is the word for crisis in Chinese. It's kind of interesting that this word is made up of two symbols. One of these symbols stands for danger, and the other symbol means opportunity. I was serving along with George, some others on the legislative task force, and we were at a meeting at the Capitol building when a person stood up and said, how are we possibly going to adjust to all these changes taking place as a result of COVID? How in the world are we going to do this? People are working from home more, they're not driving as much. How are we going to make all these adjustments? And my response is, thank God Almighty, we live in the United States of America. And we don't live in a place like Venezuela or many countries in Europe or countries in Africa. Because what happens in those countries is when they see a crisis like this, they put a governmental committee together. The government gets together with a committee of people, and those people say, well, we need to take more resources from this area and put it in this area. That doesn't happen in the United States. In the United States, the movement of resources from one area to another happens automatically without anybody running it because of this wonderful mechanism we call the market system. Because what's going to happen if there is a decline in the need for office space, okay? Because more people are working from home, the price of office space will go down. If there is an increase in the demand for people delivering goods and services to homes like Waitar and others, their price will go up. Resources will naturally move from the lower priced area to the higher priced area without anybody running it. We don't have to have a committee. We live in this wonderful country where these changes take place automatically, quickly, and very, very efficiently. We are so lucky to live in the United States of America. This is a crisis in your community, but one of the things, you're so lucky that we live where we live right now, because you're going to be able to handle this crisis just by watching what happens to the price mechanism. And I hope that's an optimistic note on which to finish up our talk today. So, George, do we have any questions we need to deal with?
Well, one of the questions is that someone wanted to know if you think that companies are going to be put their hiring on hold and just keep the essential workers, or do you see companies expanding?
Well, I think you're going to have some they're putting in a hold. Everybody started out really putting things on hold in the first half of the year. But what is happening now is you're seeing more and more and more and more hiring taking place. The bigger problem in Lake Charles is going to be housing for the employees. That's something that's going to have to be addressed, and you're going to have to fix. That's going to have to be fixed in somehow or another. So I think that is going to happen, and you're already seeing people getting back to work. What you have to kind of be a little bit concerned about is in the first half of the year, that return to work did not happen very fast. And one of the primary reasons it didn't happen very fast is we had a very generous UI program. That extra money that was added to the UI benefits put people in a situation where they made more money staying at home than they did work. Well, it doesn't take a genius to figure out what you decide to do under those circumstances. But now that extra benefit has gone away, I think you're going to see people coming much faster into the workforce than they did in the earlier part of the year. All
right. Well, we do have some other questions, but we're short on time. We've run over, but we want to thank you, Dr. Scott, for the information. It was very informative, and we really appreciate the effort. We had to delay your report, but we had circumstances that warranted that, and you've been able to react to it and give us an update. and we really appreciate that. We want to thank Iberia Bank and First Horizon and Phil Earhart for sponsoring the program, along with the McNeese State University H.C. Drew Center for Business and Economic Analysis with Dr. Dan Groff, Executive Director. And we will be sending out a link later today to all of you who have participated on the webinar, so you can get Dr. Scott's report for your own use. And so again, thanks everyone for joining us, and we wish you all the very best the remainder of the year. Thank you.
Thank you, George.